Hey there, my name is Brad Banks. I'm a self made millionaire that's committed to helping you with your finances and delivering easy to understand concepts and tips to help you accomplish your goals. In my last video, I discussed the top investing mistakes that people make. One of those mistakes is not investing early enough. In order to invest like a pro, there are some basics you need to understand that will help you think through investment types in a different way. It will shift your perspective to a manner that will result in better decision making. Today's video, I'm going to be discussing real assets versus financial assets, why they're important, and how they can be a part of your portfolio in their financial management journey. My goal is for you to learn practical tips that you can apply to your life, be entertained throughout the video, and I'm hoping you'll subscribe so that I can spread financial acumen throughout the world. Let's get into the video. The financial world is full of jargon terms that can be difficult to learn and can also be quite intimidating. Let's break this down so that we can start on the same page. When comparing real assets versus financial assets, we need to know what an asset is. An asset is defined as something that has redeemable value or quality. Assets can be physical things like a home or things that aren't physical like software. Now that I've clearly defined what an asset is, let's compare real versus financial. This subject isn't discussed much in personal finances and is very important because the wealth of society is determined by the productivity of its economy. The economy is made up of all the goods and services people can create. The capacity that can be created to make up an economy consists of real assets. Real assets include things like real estate, which includes lands and buildings, equipment used to create and modify things, and the knowledge that people can use to create new goods and services or improve them. This is not to be confused with financial assets. Financial assets include things like stocks, bonds, and cryptocurrency. If you own a financial asset, then you own the claim to the income generated by a real asset. Most people aren't able to go out and start a software company, but you can own a piece of one by purchasing a share of a software company or a financial asset. Real assets generate net income to the economy and play a large impact in helping it grow, whereas financial assets just create a defined line of the wealth and income of individuals. According to the Federal Reserve Flow of Funds accounts of the United States, the total real assets of U.S. households makes up 30%, and the total financial assets make up 70% of total value. There are advantages and disadvantages to owning either, just like anything else. Some of the advantages of owning real assets include stability, their value change typically isn't as drastic as financial markets, cash flow from real assets such as real estate, equipment, and land can be lucrative endeavors. When it comes to real assets, it's not all positive. When you want to purchase a real asset, sometimes the transaction costs can be extremely high. They can take a long time to sell, and they can also result in high maintenance costs. When it comes to financial assets, things are quite different. Financial assets can be sold almost immediately and turned into cash quickly. The right choices can provide surprising results. It doesn't require much effort for your money to grow over time. Just like real assets, there are pitfalls with financial assets. One of the most common issues I've heard related to financial assets is that people invest in the companies or projects that don't work out and they lose money. Since you aren't involved in daily operation of a company, there's less control for the investor, and it can be very difficult to build wealth from financial assets alone. The good thing is that the advantages and disadvantages of real assets pair nicely with the advantages and disadvantages of financial assets. In summary, we realize that real assets create goods and services that are a major factor when it comes to creating wealth, and financial assets represent claims to that wealth. That's why it's good to build multiple streams of income in things that you can control and are good at, and continue to invest in financial assets along the way. Both types of assets are major contributing factors for most financially savvy people, and it's important to mix it up with this dynamic duo for optimal success. In future videos, I'm excited to continue building on these foundational topics together and help you become more confident with your money. Let me know what your financial goals are in the comments so that you can have them in mind and we can continue building together. See you in the next video.